Today I want to talk about people talking about an impending recession that we shouldn't invest yet and just buy the dip or whatever they'll go cash heavy and they're selling off their investments and they're keeping it in cash because they're going to fear that the market's going to go down and people have been saying that for years now. I think I heard it probably 3 years ago that we're due for a recession and there's going to be a recession next year, and everyone's saying 2020, 6 weeks we're going to have a recession, whatever. Um, and that keeps a lot of people out of the market. I feel like it's almost a tactic that some people use to keep other people out of the market, and then they don't realize the gains that everyone else does. It's kind of a slimy tactic that I'm not a fan of. And on this channel, I keep it clear with you guys. So I would say if you've got money, if you got cash just sitting around, put it in the stock market, but don't put it all in at once. All right. Schedule automatic deposits. Just put that cash in a savings account, whatever, a checking account. Schedule automatic transfers to M1, Robinhood, whatever brokerage you use, and just leave it like that. Just schedule your deposits and however much you want. I would say, um, I'm doing about $100 a week on each of my accounts, more or less depending on how much you've got. But just make sure that you spread this out over a long period of time. I'd say at least 6 months. It'd be better, if you had it for 3 or 4 years, just a constant uh, transfer, just a constant deposit, right? So here's my portfolio. It has gone down a little bit. My overall gain, I'm down 0.6 this week. Yeah, I'm down 1%. That's mostly real estate, and I've bought into that quite a bit. It had a little dip. Real estate doesn't always follow the rest of the market. I think the rest of the market was actually, yeah, I think judging from this, the rest of the market was probably up a little bit this week. But since I'm so real estate heavy because I like the high dividends and the stability that real estate provides, um, I'm a little down this week, but it's all good. I'm not worried about it. I wanted to show you my automatic deposits that I have, right? So right here, I have, this is a deposit that I scheduled for Monday, and then I have this scheduled for Tuesday, this scheduled for Wednesday, and that's 130 bucks next week that I've already got scheduled. This is recurring. All of these are going to be put in every week, and that's how I've been growing this account. It's called dollar cost averaging, and I basically, since you put money in when the market's both high and low, you buy more shares when the market's low, and you buy less shares when the market is high. So that dollar cost averages your balance down, right? So your amount per share that you actually spent is less when you put it in the market, not all at once. That's why I recommend, schedule an automatic transfer and don't put all your money in at once. Um, so I wanted to just go ahead and look at the S&P 500 ETF here. This is as close to tracking the market as you can get, and I it, I'm just trying to look for any signs of a recession for you guys. I am not worried about a recession coming up. I don't think you guys should be worried. I definitely don't think that you should be taking your money out of your investments and going cash heavy just because you think there's a recession going on. You'll probably miss out on a lot of gains, right? So if there is a recession, like if I thought that a recession was, that we were getting close to recession and it was, doomsday coming or something, then I would expect this dividend to be really low, right? I'd expect it to be, 1.5 or even lower, right? Up here, this was that December little correction that we had. It went above 2.1. And right before that, we were below 1.7. Right now, we're sitting at 1.78, and it's been at this level for the entire year. And it's been up over 20% for this year. So I am not worried about a recession. If it was down at 1.5 or even lower, then I would say that a lot of the market is overpriced right now, and you might not want to schedule your automatic deposits. But right now, to me, um, the yield curve has is not inverted anymore from the Fed. Um, they're injecting money into the market. The interest rates are lowering, which is a good and bad sign. And the overall dividend yield of the market is right where it should be. So personally, I don't feel that we're going to be in a recession anytime soon. Another point I wanted to show you guys is what I've sold. So I actually have sold a couple companies. So I've sold Bank of America. I just don't really like them. I think that they use some, tactics that aren't ideal when handling customers, especially lower amount customers. And BIP is actually I had it in the wrong section, and I deleted it out of my fund section, and I left it in my utilities section. So I still have Brookfield Infrastructure Partners, but it's just in a different section, and I sold it. I realized I had it twice in my portfolio, so that's my bad on that. I wanted to show you guys my Robinhood. I think it is, yeah, it's down this week as well. That's just, that's just from the market itself. I think I'm way down on Tupperware. Some of my losers went way down. General Mills, those are two that I hate that I bought, but I did. And it's whatever. I'll work with it. AbbVie, of course, I did a video about that not too long ago, up 4% just in a day. I've made $72 on AbbVie, a crazy amount for only having 4 shares, 5 shares, crazy. AbbVie, I'm telling you guys, it's gonna keep going up. It's gonna keep going up. Anyways, this is my Robinhood. Again, I have half of it in funds, right, to smooth out this smooth out this decline, incline, whatever. You don't want to see huge sharp drops, in your portfolio. And with Robinhood, it's really easy to see that if you go too heavy, in one of your swing trades or in one of your short-term investments. It's really easy to see huge swings in your portfolio, and that's not fun to see, especially if it goes down with a lot of your money, right? So again, keep at least half in these funds, smooth out this curve right here. And then I wanted to show you guys some of the future. It's predicted that the first trillionaire will actually be asteroid miner. Obviously, space is the last frontier, and NASA is investing heavily in SpaceX and other commercial companies to try, and really what they're trying to do here is commercialize space, right? That's what they're trying to do there. The first step of space is the first step here is pretty much like tourism into space, and then exploration will be a part of that, and then asteroid mining and other planetary resources type of stuff will be available, and it's supposedly that the first trillionaire will be an asteroid miner. So it's interesting to say like how to invest in these, how to invest in space, how to invest in this new upcoming market, which it is the last frontier. It will be huge eventually. Really what you have to think about is how old you are. Personally, I'm in my 20s, so I think that space exploration and space tourism will be huge by the time I'm 50. So I'm looking to get in on this while it's low, right? And see this, grow exponentially as I age. So basically, who to invest in? I would say So Boeing's got the problem with the Maxes right now, and Boeing is one of the big players. But Virgin Galactic and Lockheed Martin are both uh, becoming bigger players in the space industry, right? And Lockheed Martin is specifically for defense, which is very interesting, and will always have a contract. So personally, how I'm going to handle this is I'm going to invest in Lockheed Martin, probably 90% for my, space. I'm actually going to probably create a new section of M1 Finance over here and put probably 80 to 90% in Lockheed Martin, maybe 5% in Boeing, just because right now Boeing's going through some trouble, and probably 5% in Virgin Galactic. And I think I'm just going to hold it there, keep putting a little bit of money. It's not going to be a huge percentage of it, maybe 3 or 4%, and watch this industry take off, right? Because right now, this industry is basically just construction of these spaceships. Eventually, it will be about tourism and how much profitability is possible off of this tourism, and then it'll be about mining extraterrestrial landscapes. So I'm really excited for this industry. I always like looking way ahead into the future, and this is one of those investments. It's way ahead into the future. I feel like with Lockheed Martin, they have huge defense contracts. They're not going to go under any, they're not going to, they're still a great company. They have a nice dividend. I like Lockheed Martin a lot. And I think that looking ahead into the future is one of those things that will pay off in the end. So the things that I'm looking at here are solar panels, electric cars, and space. And it seems like everyone is on Tesla. You know, solar panels are becoming a huge deal. I have BEP, Brookfield Energy Partners. I have them in M1. It's a great company. It's utilities, but it's solar panels. It's renewable, and space flight. And I think space flight is an industry that not a lot of people look at to invest in. And I think it's going to be a big deal here in the next couple years, actually. So instead of focusing on Tesla that doesn't pay dividend, that swings, heavily, try looking at Lockheed Martin or Virgin Galactic or one of these other companies that don't get as much coverage. So I hope I left you guys with some thoughts. Comment below if you have any questions, and I'll see you guys in the next video. Take care.